Hi, and welcome back to Squirrel School. If you're new here, make sure you click subscribe to never miss a video on self-managed super funds. Today, we're looking at how investing in commercial property with your SMSF can grow your nuts for retirement. First of all, what do we mean by commercial property? Commercial property is also known as SMSFs as business real property and refers to any piece of real estate from which a business operates or can operate. Let's take a look at the benefits of investing in commercial property. Commercial properties can provide impressive returns to savvy investors. A loophole in SMSF rules allow you to operate your own business from a commercial property owned by your SMSF. Commercial properties can often attract long-term tenants, giving your super fund trustees an element of income certainty. Income generated from leasing the property is taxed at the SMSF concessional tax rate of 15%, whilst in accumulation phase. If the commercial asset is sold, the SMSF pays capital gains tax at the concessional rate of 10%, providing the premises have been owned for over 12 months. Choosing the right commercial property can mean your fund enjoys substantial investment returns. Much like residential property, smart investing is about assessing supply and demand. Here's an example. Meet John. He invests in a commercial property in a popular precinct near a major university. He leases the property to a couple who operate their own cafe. They're willing to pay premium rents to be closest to the university and gain access to thousands of caffeine-starved students each morning. The loophole. Running your own business from an SMSF-owned property. When an SMSF invests in residential property, the trustees are not permitted to live in or stay at the property at any time. Commercial property is slightly different. If any of the SMSF trustees run a business, that business is permitted to lease the SMSF-owned property, providing it is at the market rate under an arm's length agreement. It sounds like a loophole, and it kind of is. Nuts of wisdom. The benefit of your own business leasing its premises from the SMSF is that the income paid in rent goes straight into your super fund and therefore enjoys a 15% concessional tax rate. Your business is able to claim a tax deduction on its premises, but your fund grows in the process. Let's take a look at the costs you may incur if your fund purchases an investment property. Accounting fees, depreciation schedules, deductions, inspections. The tax obligations of an investment property portfolio is complex. You'll need an SMSF account that's experienced in handling SMSF-owned real estate. Legal fees. Transacting real estate is complex, especially when an SMSF is involved. Your fund will need to be able to cover the costs of commercial conveyancing when buying and selling. Maintenance costs. Being a landlord means you're partially responsible for maintaining the property. Insurance. You'll need to have appropriate commercial property insurance policies in place. This ensures you're complying with legal obligations and protecting your fund from financial liabilities. Vacancy periods. If you rely on your annual rental income to cover other costs, vacancy periods can have a huge impact on your fund. Oversupply or lack of demand can mean commercial properties are left vacant month after month, costing the landlord and your super fund big money. Stamp duty. SMSFs are often subject to stamp duty, just like you and me. Agent fees. Should you eventually sell the property, you'll need to engage a trusted commercial real estate agent to execute the sale, auction, and open for inspections. Capital gains. As with any asset, when you make a profit upon the eventual sale of that asset, your fund will realise a capital gain, and this is subject to tax. Under a limited recourse borrowing arrangement, SMSFs can borrow up to 80% of the property's price and use a portion of their super fund as the remaining 20% deposit. Nuts of wisdom. A limited recourse borrowing arrangement means that the lender cannot claim against any other assets within the SMSF should the loan go into default. As with all SMSF assets, commercial property investments must meet the sole purpose test. This means that there must be no immediate benefit to the fund members beyond growing their retirement savings. Qualifying as business real property. To qualify as business real property in the eyes of the ATO, the premises must be used entirely by one or more businesses. If there is any residential component, it is not classed as business real property. The dwelling must also be in an area of land no more than 2 hectares in size. Leasing the premises to a business associated with the SMSF trustees. The ATO is very strict around the rules here, so it's important to keep on top of your compliance. The business must pay rent to the super fund as though it were a regular landlord. That means at market value and at agreed regular intervals. Leasing a property owned by your super fund does not mean the business can be late with payments, skip payments to navigate cash flow issues, or pay a discounted rate. The property must be regularly and independently valued to ensure the leasing arrangements remain in line with true market conditions. Nuts of wisdom. The ATO reminds all SMS investors to ensure the level of investment in business real property still meets the investment strategy of your fund, including diversification of assets, liquidity, and maximisation of member returns in your fund. In-specie transfers of commercial property. Business premises owned privately by any SMSF trustees can be transferred into the super fund via an in-specie transfer as a non-concessional contribution. The in-specie transfer must also be in line with contribution caps. Thanks for watching today's Squirrel School video on commercial property. Now you can grow your nuts for retirement with a commercial property investment. Make sure you subscribe so you never miss a Squirrel School video.